How's it going, everybody? It's Stas here, and in this video, we're going to be talking about the stock market, breaking down what happened today in the S&P 500, the Dow Jones, and the NASDAQ, and I also want to share with you guys what I personally did in the markets today, as well as a bunch of stocks and ETFs that I'm watching and looking to trade as we're getting deeper into the month of May here in 2020. And like you guys read in the title, I also want to go over whether or not I can see the markets dropping even more from where they are right now, whether or not I see the market getting ready for a drop. So if you guys enjoy this video, as always, hit that like button, consider subscribing to the channel, and feel free to join our Discord chat and Facebook group, link down below in the description box. Those are 100% free of charge to join. So let's get into it, starting off here with the S&P 500, which ended up going down today, guys. $20.02, down 0.7%. And if you guys have been following the channel for the past couple of days, over the past couple of weeks, we've been talking about 2,900, 2,850 to about 2,900 being a very strong level of resistance on the S&P. You guys can see here on the 4-hour chart, back in August, back in October, back in February, we held these levels, and the second we broke them, they became a resistance, right? Those levels being around 2,900. And notice how over the past couple of days, we failed, actually more like the past couple of weeks, we failed at 2,870 on the 17th of April. We failed at 2,900 on the 27th of April. We broke above it on the 29th of April momentarily, but ultimately we failed holding 2,900 as a support on the 30th. And we failed breaking it yesterday and today, right? And on top of that, on the 4-hour chart, notice how 2,900 comes into play. The resistance of the 180 SMA comes into play at about 2,900. So needless to say, there are many different reasons why 2,900 is a sticking point on the S&P. And in the short term, I'm looking to see whether or not we're going to break 2,900 from the bullish perspective, or are we going to break below 2,830 from the bearish perspective, right? And notice how if we take a look on this hourly chart, actually, let's go back to that 4-hour chart. You guys can see on the S&P here, we're in a wedge, right? And me personally, I use moving averages as levels of support to identify supports and to identify resistances. And it's clear on this 4-hour chart, we're getting rejected by the 180 SMA, but it's also clear that we're maintaining the 50 SMA as a support, which means we're kind of squeezing in between these moving averages. So remember, we use these as supports and resistances. So once we pick a direction here in the S&P in the short term, that's going to tell us whether or not we're going to see more upside or more downside, right? So take a look here. If we break 2,830, like I said a couple minutes ago, if we break this level, we may drop even further. That is the bullish or bearish scenario that I'm seeing here from a technical perspective, right? We break the 50 SMA on the 4-hour chart. Let's say we break yesterday's, or rather the 4th of May. Let's say we break this low at 2,800 and we start to dip deeper into the 2,700s, this could be a sign that the markets in the short term are going to drop more, right? That's if we break down to 2,800, 2,700, right? If we fail yet again at 2,900. But let's say from a bullish perspective, we take over 2,900, we break above that level, we break above the 180 SMA, that would be very bullish, right? That would be very good for the bulls out there. We might even see a 2,950 test and heck, maybe even a 3,000 test here on the S&P 500. So really in the short term here, guys, I'm looking at this 4-hour chart. I'm looking at the two moving averages and what direction we do pick. And today, guys, I'll be honest, the bearish case is getting stronger as, again, we saw a red day in the market and we're getting closer and closer to diving below that 50 SMA with this bearish action we've been seeing. So take a look at those couple of levels on the S&P and keep an eye on what I said over these next couple of days, as it's really going to determine the direction of the S&P in the short term here. And when it comes to the Dow Jones today, guys, down about 218 points, down 0.9%, and same thing as the S&P. We're seeing a lot of resistance under the 180 SMA. We're starting to dip below the 50 SMA here, and we're honestly starting to break this uptrend that we're seeing here on this 4-hour chart ever since we've been recovering over the past couple of days. So these technicals, guys, are getting a bit concerning. I really need to see a break above the major moving average here for the bulls to really start kicking this thing up again, right? And you can notice even on this 20-day chart, a head and shoulder could be forming here, guys, right? If we do end up tanking down here, that would be the completion of the right shoulder that we're seeing here on the Dow, right? And the same exact thing on the S&P 500. You notice, if we break that 2,800 level I was talking about, that would be the completion of the right shoulder of the head and shoulder pattern, and we might see even more downside from there. And remember, guys, we've been talking about the bearish divergence on the overall S&P when we take a look at the 3-year chart. This is another reason why we might see the continuation of a bearish trend here. Notice how over the past 3 years, the market's been making higher highs and pushing up in price, but the strength of these moves has been getting weaker and weaker over the years. Take a look. The RSI here peaked at about 92 on this high, back in 2018, but as we peaked in 2020 at about 340, the all-time high on the S&P, the RSI, the move wasn't as strong. The RSI shows it was at 75 when it made that move to 340, as opposed to it was at 90 when it made the move to about 286. So you guys can see the bearish divergence here is very clear. So we have a couple of different really key signals here from the bearish perspective, and again from the bullish perspective, we really need to see that pop above 2,900. And when it comes to the NASDAQ today, guys, it actually did well. It was green, up 0.6%, up $54, and that is because of tech. Tech was up again today, Netflix up, Microsoft was up, Amazon was up, Apple was up, Facebook was up. Google's actually the only major tech name that was red today, down about $4 per share, and that's not even that bad considering Google is a $1,300 stock. But nonetheless, NASDAQ is actually the most bullish out of the bunch, technically speaking, and especially because we broke 8,900, we broke 9,000 today. We didn't end up closing above it, but the fact that we held 8,900 in general as a new support, that is extremely bullish on the NASDAQ here. So overall, guys, we know the market at this point is being propped up, by the stimulus, by all of this, government injection from the Fed, printing a bunch of money, but it's also being held up by the big tech names. Again, FANG making up about 20% of the S&P 500, and most of them are at all-time highs. So for us to actually see this big drop in the S&P, for us to actually see that break under 2,800 and the start of another sell-off in the market, we're going to need to see a lot of these big FANG stocks come down, and we're going to need to see a negative piece of news here around the reopening of the economy or something like that. Something go wrong. We're going to need to see a failed vaccine, issues around the economy reopening, issues around, anything, guys, right? Because at this point, the markets are running on pure optimism that everything's going to open up and be great again. The second something happens that deters us from that, we're going to see some negative pressure here, right? So I'm looking to see if we get that catalyst, if we get these negative technical breaks to the downside. That's kind of where my head is at right now in the markets. And as always, when there's uncertainty, what's the best thing to do? The best thing to do is stack cash and not rush into anything, not make any FOMO decisions, not make any irrational decisions. The best thing to do is to save up that dry powder and get ready for opportunities. So let me know down below in the comments, guys, what are your thoughts on the market? What are your thoughts on individual stocks, ETFs? I'd love to know down below in the comments. Now, what I personally did in the markets, and honestly, guys, I'd love to know whether you think we're going to see another crash here down below in the comments. And for me, what I personally did today is I traded Beyond Meat. That's the first trade I made today, ticker symbol BYND. And this is one that reported earnings yesterday, guys, and it was up 26% today, up $26 per share. Absolutely incredible day for Beyond Meat. So they reported EPS of 3 cents versus the -6 estimated. So they pretty much had a profitable quarter, beat EPS by a long shot there compared to what analysts were expecting. And revenue came in at $97.1 million versus $86.4 million. So they crushed on EPS, they crushed on revenue. And we got some more details of U.S. retail revenue up 157% year over year, and the food service revenue is up 156% year over year. So they are growing immensely still, and needless to say, guys, this was a killer earnings report when it comes to EPS and revenue. So you guys can see this thing was a winner all day. I personally got in at about 940. Right. You know, once I saw the first pullback, I wanted to build a position, right? So we rallied from 110 up to about 116. We started to see a bit of a pull down. 112, I actually got in before we actually got to 112. So I got in at about $114.60. That's where I filled. So I got filled on the way down here, and I actually sold on the first sign of strength. We started rallying back up to about 118. Started pulling down, and I wanted to sell. I should have sold into the strength. I didn't actually. I actually sold after the strength started to wear off. So I sold into this weakness here at about $116.40. So that was the first trade of the day. And looking back, guys, you know, a trade of about 2.8 to 3%. You know, looking back, I obviously left a lot of money on the table, but that's okay because profit is profit. Now we can move on and kind of prepare for the next opportunity, which at this point, you know, if Beyond Meat ends up holding 125 as a support, you know, it is a bit overextended, but let's say it does hold this level, you know, in the short term, we can make a move up to 137. And, you know, a lot of people at this point, they're purchasing a lot of the product. This is not maybe official statistics, but from my personal experience going to the supermarkets, the meat department hasn't been up to par, really. There's been a lot of meat shortages, at least where I'm at. So this could be one of the reasons why, and again, this is not official. This is kind of from my perspective, what I've been seeing. I've been talking to different people. You know, you're seeing a lot of meat, traditional meat, not there. You know, you're going to buy some Beyond Meat. You're going to buy some fake sausage, fake beef, whatever. You know, this is kind of why I think in the short term here, they're doing very well, right? A lot of people are buying up their products, and this could definitely continue in the short term, which is why I think there could be some more upside for, you know, the stock. And another move I made today was in SPCE, also known as Virgin Galactic, guys. And this thing has been crazy. They just reported earnings yesterday, and I personally got in after the CEO was actually on CNBC. He had an interview, and right when he began speaking, or that aired, whatever, the stock went from 17, 16 all the way up to $18. And I actually bought a little bit on the pull down here, and my goal with this is actually to swing trade half of the position, and I actually sold out of half the position for a profit, as we did end up rallying almost to $19 per share. So I ended up getting in at about $17. Let me see here on in my notes, about $17.80 on this weakness here, and I sold out of that 50% of the position at about $18.30, and I plan on swing trading the rest of the position here, as I do see a lot more potential in Virgin Galactic here over the short term, right? I can see it in the short term at least going to $21 per share, right? We struggled again at about 19, but I'm telling you guys, if we break 19 on SPCE here, I can see it filling that gap very quickly, maybe even in a day, as we've seen it run like that many times before. So that's what I personally did today, guys. Beyond Meat, Virgin Galactic, very, very high flying stocks today, very high movers in the markets today. And let me know in the comments down below what you guys personally did. I would love to know that. Now, let's talk about some more stocks that ended up doing great today and that reported earnings. One of them being Shopify, guys, ticker symbol SHOP, which ended up crushing earnings just like Beyond Meat did. They reported an EPS of 19 cents versus the 18 cents, negative 18 cents estimated. So they pulled out a profit while analysts were expecting them to not be profitable. And revenue came in at $470 million versus $443 million. And the quarter one revenue, guys, is up 47% year over year, just to show this is a growth beast, guys, up 50% year over year, and their subscription revenue is up 34% year over year. So they're doing pretty solid amidst this crisis right now, amidst the CV right now. And you guys can see, and we talked about this in previous videos, I personally missed the move, but you guys can see it ended up doing exactly to what we talked about. And what we said is 660 is going to be a tough level, or a strong level rather, of support for Shopify, considering that we actually broke the resistance from the 27th of this month, or last month, April, right? And once we broke 660 as a resistance, obviously it became a support. So this would have been a perfect trade here. Again, I missed it, guys, but you can see we pulled down, we hit 660 on the dot, and we rallied all the way up to 740. So for me, guys, I would need to see a little bit of a pull down here on Shopify, maybe down to about 700. If we can test that as a support, that would be fantastic. And hey, maybe we get down to 660 again, 680. That can also be an entry point here in the short term. And again, Virgin Galactic, guys, is another one on my list here. No need to go deeper into it, but I think $19, if we break it, $21 is going to be the move there, and that is why I am holding shares. I'm putting money where my mouth is, right? And Square SQ is another major one here that just reported EPS of negative 2 cents, so they lost money there versus the 13 cents estimated. And their gross payment volume, which is pretty much the total dollar amount of card payments processed by merchants using the Square system, was down a bit versus the consensus estimate of about $27.3 billion for the quarter. It was actually down to $25.7 billion. And it makes sense, guys. At the end of the day, right now, people aren't consuming as much as they were pre-crisis. It's just a fact. It's a given. People aren't buying as much because they're not going to stores as much, restaurants, the malls, boutiques, the casino, whatever. People aren't doing as much, so it makes sense why the gross payment volume is pretty down. And we can see the stock after hours is absolutely tanking. It went from 69 to 62, rallied back up to 67. Now it's down to about 65. So considering that this could be an overreaction to the stock, we could profit tomorrow accordingly, right? If it's an overreaction, and if it's able to hold this trend overall on the hourly chart as it looks like it is, right? It's holding a higher low at about 63 to 64 bucks. So for tomorrow, guys, if this is an overreaction and we fill the gap back up to 68 bucks, 69 bucks, maybe even 70, that is where we can profit, right? That is what I'm looking for on Square. And ultimately, guys, I'm looking at 65 as well. If we're able to break it, watch for that fill up to 70. That could be around a 6% potential for profit. So let's run through some other stocks. Disney reported yesterday. They cut their dividend. Stock down about 18 cents today. Not doing much, but overall, I'm looking to see, if we're able to break back into the hundreds. I mean, obviously it's in the hundreds right now, but if it's able to break back into, let's say, 103, 104, it could be a short-term trade back up to maybe 108, 110. MasterCard is another one I'm watching here, ticker symbol MA. If we're able to hold 270 here, guys, which we closed above it, we may be able to rally in the short term back up to 285, maybe 280. That's kind of what I'm looking for here with MasterCard. Gold had a pretty bad day today. GDX down about 3.13%. Gold miners ETF. You guys know I'm in options when it comes to GDX. And if you guys actually want to see a Webull options video going over how to buy calls and puts on Webull, very beginner friendly, that's linked down below in the description box. You can also get 2 free stocks valued up to $1,400, depositing $100 into the account. That's also linked down below in the description box. Gold in general today, guys, back under 1,700 an ounce, but the positive thing is we are holding 1690-ish, which is a general area of support here. So for the bulls out there, 1,700, we need to break back above it. I think it's going to happen, but it's going to take some time here. It's looking like patience is key, right? So a couple other ones here. NAT, Nordic American American Tankers down another 5% today as crude oil is looking to kind of rally here. Let's be honest, guys. Crude oil is rallying. It went from about $11 back on the 28th of April. Now it's at about $23. But will this rally last? I personally don't think so. I think in the short term we might see some more downside as there's not a lot of demand. Production is through the roof, so we might see the price of oil continue going down here. We saw Tesla have a pretty decent day today, up about $14, up 2%. But overall, there's a sticking point at $800. I need to see the break above there before potentially building a position. And to end off the video, guys, natural gas has been on an absolute tear. And notice how at this point in time, it seems like the trend is finally reversing. We downtrended for months. Now it seems like we're breaking back up. And notice how we are holding this 50 SMA as a support here on the 4-hour chart. And you guys know if we do hold this and start to rally back up, we could end up trading UGAS, which is an ETF that goes up whenever natural gas is going up at a 3x rate. So that's kind of my thoughts here. UGAS went down 21%. We might see a massive push back up tomorrow if the overall uptrend is able to hold on natural gas. So if you guys enjoyed this video, I'm going to wrap it up here. Let me know down below in the comments, what are your thoughts on these individual stocks? What are your thoughts on the markets? Do you think we're going to crash again? I would love to know. And feel free to hit the like button as well if you did enjoy the video, and subscribe to the channel if you want to see further content like this. And don't forget, again, to claim your 2 free stocks valued up to $1,400 on Webull. All you have to do is put in $100 and you get those 2 free stocks. Link down below in the description box. I hope you guys had a fantastic day. Stay safe out there as always. Peace out. I'll catch you all in the next video. See you guys.